By the way, if you could go through life without having to recognize gain, cha-ching, 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 never having to recognize any gain, imagine how fast you could accumulate wealth. The rest of us have to go get a paycheck and give half of it to the government and then the other half go to our life expenses. But with real estate, you have sort of an easier way to accumulate that wealth because you are able to defer the gains and keep that money working for you. And also in real estate, you get to use leverage. You can borrow money to increase your buying power, and you get to deduct the interest on the loan that you take out for business purposes to acquire the property. So there's a lot of advantages for building wealth in real estate. Tax deferral, OPM, other people's money. These are all important trends that are in your favor.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey, everybody. Welcome to the Real Estate Pros podcast. I'm your host, Michelle Kesil. Today, I'm joined by someone that I'm looking forward to chatting with, Jeffrey Peterson, who is a Minnesota attorney and professor of tax law, helping specifically with compliant 1031 exchange strategies. So excited to have you here today, Jeffrey.
Thank you. It's so nice to be here. Thank you.
Of course. I think our listeners are really going to take something away with your expertise on tax strategies for investors. So let's dive in.
Awesome. I'm excited.
First off, for those not yet familiar with you and your work, can you share what your main focus is?
So Section 1031 is a provision in the Internal Revenue Code. I can tell people are falling asleep already. And it allows you to not have to recognize gains when you sell appreciated real estate. So if you own a single-family investment, a duplex, a triplex, small apartment building, a farm, industrial building, whatever you own, and it's appreciated in value, you may not want to sell it because you're concerned about triggering a lot of taxes. And so this is an avenue, a vehicle for you to defer those taxes, but it requires that you continue your investment into other real estate that will also be held for investment or business purposes. So it's not a get out of jail free card. It's a reinvest, don't cash out, and we'll let you roll over the gain for a while kind of provision.
Absolutely. That's super helpful and important for investors. How do you support them through these tax codes?
So there's a lot of different people that might be involved in someone's 1031 exchange. Their real estate agent, the title company or escrow company that's closing the transaction, a law firm that might be involved in closing the transaction. There is your accountant or your tax preparer or TurboTax, whatever you might use for your tax preparation. And you need a qualified intermediary. And so that's what we do. Is it's a very niche business where we act as sort of the third-party administrator that facilitates the mechanics of your exchange. We prepare the 1031 exchange agreement that makes us become your intermediary. We become sort of the synthetic seller of your relinquished property. And we actually are being paid by you to hold your money and apply your proceeds to the replacement investments that you designate during these exchange deadlines. So the first deadline is a 45-day deadline in which you have to designate or identify the replacement investments that you want to purchase. And the second deadline is the 180-day exchange period in which you have to acquire the replacement property. And there is an opportunity for the IRS to shorten your 180-day down to the due date of the filing of your federal income tax return. So be careful if you're starting an exchange late in the year and you file on maybe March or April 15th, you may not get the full breadth of your 180-day exchange period unless you extend your tax return filing deadline.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, absolutely. And are you operating nationwide?
Pretty much nationwide.
Awesome. What are the most common roadblocks or like pitfalls that you see your investors go through?
I think generally speaking, there is a lot of misinformed and ill-informed people about how 1031 exchanges work. And oftentimes I feel like I'm being punked, like that television show that Ashton Kutcher had, because people call me up and they say, I've already received the proceeds from my sale. I closed on the relinquished property, and now I want to do a 1031. And they are misinformed. They thought that they had 45 days after the closing to get set up with an intermediary. But in fact, you need to get set up with the intermediary before your closing takes place, before the benefits and burdens of ownership shift, so that you can be insulated from receiving those proceeds. Once you receive the proceeds, cha-ching, you have a recognition of gain. There's also some other requirements. You have to give certain notices to the other parties that you're doing an exchange. And there is sort of a formula or framework in which you have to do the exchange to make it compliant under the safe harbor for qualified intermediaries. So we have to restrict your ability to hold your own money. We have to restrict your ability to receive those proceeds. What you're going to receive instead of your proceeds is like-kind real property investments that you designate and acquire within the deadlines that we've talked about. By the way, if you could go through life without having to recognize gain, cha-ching, 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 never having to recognize any gain, imagine how fast you could accumulate wealth. The rest of us have to go get a paycheck and give half of it to the government and then the other half go to our life expenses. But with real estate, you have sort of an easier way to accumulate that wealth because you are able to defer the gains and keep that money working for you. And also in real estate, you get to use leverage. You can borrow money to increase your buying power, and you get to deduct the interest on the loan that you take out for business purposes to acquire the property. So there's a lot of advantages for building wealth in real estate. Tax deferral, OPM, other people's money. These are all, important trends that are in your favor.
Yeah, absolutely. Those are important strategies. Do you find yourself working with new investors, or are you like working with experienced investors that maybe aren't aware of some maybe higher level tax codes that they can also work with?
I would say that about 70% of our customers are first-time 1031 exchange candidates. They've accumulated some wealth, they've built some equity, and now they have an opportunity to sell it. Sometimes the opportunity has just fallen in their lap because they haven't even advertised the property for sale, and they have to, decide, do I want to pay the taxes and just get this over with, or do I want to continue my investment in real estate to defer the gains? And that's the decision that a lot of them have to make. I think that some people have real estate in their blood, and they really don't like paying taxes unnecessarily. So sometimes the decision is very easy. I want to defer the taxes, and I'm not going to do a sale unless I can structure it in a tax-deferred manner.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, absolutely. Besides 1031, are there other strategies that people can use as well?
There are a number of other strategies for one's principal residence, your home that you live in. There's a different code section, Section 121, that has to do with the sale of one's principal residence or domicile. And that's an interesting code section because it actually excludes the gain as opposed to 1031, which merely defers it. But the exclusion is capped at $250 if you're single, $500 if you're married. Now, what's really interesting is if you own a property that's a mixed-use property, maybe a portion of it is your principal residence and a portion of it is used for investment rental purposes, like a duplex is a good example. Or a lot of people that are doing the housing hack will live in one bedroom and rent out the other bedrooms to their friends, right? Well, when you go to sell that property, you can take a principal residence exclusion for that portion of the property that's been your domicile, your home. But for the other portion of the property, say a duplex, the other half of it, you could do a 1031 exchange and split the baby, if you will, split the proceeds to maximize the benefit of both the principal residence exclusion for the domicile part and the 1031 exchange for the rental business part. And then you get the maximum benefit. Now, here's a really interesting strategy. In places where appreciation has increased far more than the exclusion amount, let's say that you bought a home in Los Angeles in 1977, and now it's worth $1.5 million more than you bought it for. That's more than $500,000 if you're married, more than $250 if you're single. And you may say to yourself, I'm going to get my clock cleaned if I sell this Los Angeles property because my exclusion isn't enough to cover my gain. So you might consider moving out of your Los Angeles home and turning it into a rental so that when you do eventually sell it, now it's eligible for both the 1031, but the look-back period for the principal residence is 5 years. So you have to be able to say within the last 5 years, it was my domicile for 2 of those 5. Now you're also able to take the principal residence exclusion. Again, it's kind of like the duplex, but it's different. You're able to take the 1031 for the excess over and above the exclusion amount. Awesome strategy.
Yeah, absolutely. That is awesome that people can utilize these and grow their wealth in these unique ways.
A lot of business owners are trying to sell their small inner city parcels where they may be kind of constrained and locked into a too small of a facility and too small of a neighborhood, and they want to expand and grow out in a different area. So they're doing 1031 build-to-suit exchanges where they sell their relinquished property and use an intermediary to not only facilitate the exchange, but also to facilitate the construction of a new facility. So they may buy a piece of dirt and quickly assemble or construct their new facility in which they want to do business. A lot of times people are selling in an inner core area and they're moving out to where land is cheaper and the regulatory environment is a little bit more friendly. And so you see people constructing new facilities and using their tax-deferred dollars to pay for the construction of those improvements. That really gives them a double benefit because they're able to fund the construction, and then that construction allows them to be more productive because they built the property to their specific needs and specifications to maximize the profitability of their business and make them more efficient. So it's a win all around for business owners to do a build-to-suit construction exchange.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, definitely. And when you're supporting people, like what does your role look like in their process with these tax codes?
Well, we're not their accountant. We're not their attorney. We're not their best friend. We're not their nursemaid. We are a third party acting as a principal to facilitate the mechanics of the exchange. And so we're very knowledgeable, but really our role is to prepare the 1031 documents precisely and correctly for this transaction, to hold the money from the sale, and then coordinate the logistics. If they need to make an identification, they can send the identification, a written designation, to us before the deadline passes. If they need to acquire replacement property, they can designate that property and direct us to purchase it for them. So there's a very unique role here. And it's a very narrow role in that we're only in this relationship with them for up to 180 days, and oftentimes much shorter than that, because people tend to get in and out of these exchanges very narrowly and quickly because they want to get their money redeployed. They want this money to get back to work for them, and they want the certainty that they've locked in this tax deferral. The longer this exchange goes on, the more uncertainty there is whether or not this looming tax bill is going to come home to roost, and they're going to have to pay a lot of taxes. So lots of people want to finish out the exchange and get it done with as quickly as possible.
Absolutely, that makes sense. What are you most focused on solving or scaling to next when it comes to the next piece of your role in this business?
I think that the thing that's going to change this industry is the securitization of real estate, that more and more real estate investment trusts, like REITs, are dropping properties down from their REIT into what are called Delaware Statutory Trusts, or DSTs. And when you buy a beneficial interest in a DST that's properly set up, you're deemed to have bought the underlying real estate that's in that trust. So they're using the DST as a vehicle to mop up and soak up, absorb all of this 1031 money that's floating around looking for a home. The REITs are using this money to acquire the designated property. And then after a few years, if they elect to do so, they can absorb that property back up into their REIT and make all of those beneficial owners now partners in an UPREIT transaction where the only interest of the partnership are the REIT shares. Effectively, you own REIT shares through the partnership. And now, rather than having all of your eggs in one basket, you've got the broad diversity, the geographic and business diversity of the entire exposure of the REIT. So you probably have a less risky investment, and you may have even more lucrative returns because the returns are more variable when you get up into the UPREIT. So that's a really interesting development, and it gives a lot of people an avenue to redeploy their money into a real estate investment. that's not going to require them to be heavily into the management and heavy into the risk. They want a steady Eddie, relatively low risk, low management opportunity. And the financial planners are loving this because it allows them to solve a problem for their clients and get more money under management. And clients love it because when you get older, you're less able to adapt to problems and to resolve those problems, and you just don't have the energy to do it anymore.
Yeah, absolutely. That's awesome. So, how is there like a difference when it comes to every client and the tax strategy, or is it like a blanket approach for each person?
Everyone's situation is different. Some people have lots of gains because they've owned a piece of property for a long time, and every year that you own the property, you're entitled to and required to actually take a deduction for the theoretical wear and tear on that property. That's called depreciation. So if I owned an apartment building for 27 and a half years, over that 27 and a half years, I would have depreciated it down to zero, which means I took a tax deduction for each year for the theoretical wear and tear in that building. And each year that I took that deduction, I had an incremental reduction in my basis. So let's say I bought it for 100. Over time, I will depreciate my basis down to zero or near zero. Your cost is your initial basis, and then the basis gets decreased over time by these deductions. That creates a gain in itself just because your original cost basis is deteriorating. But at the same time, the property may actually be going up in value, partly because of inflation, because the U.S. currency is declining in value in comparison to hard assets, and also scarcity. Property in San Francisco is scarce. It's hard to find something to buy, and that makes the price goes up because the demand is high. So you can also have increases in value because of demand. So real estate owners have gains, and everyone's gains are a little bit different. Some are more heavily on the depreciation side. Some are on the appreciation side. These investors, though, have something in common. They generally don't want to pay taxes unnecessarily, and they want to think about things like a chess player and think 2 or 3 moves ahead. What is it that I have to be doing now in order to set myself up for success to get this tax deferral? And that might necessitate doing a reverse exchange, which is where you have the intermediary acquire the replacement property first and hold it for your benefit until you dispose of that relinquished property, typically within 180 days. So if you want to know that you got a sure thing to exchange into, and you don't want to risk the 45-day period for identifying, and you want something for sure, you can do what's called a reverse exchange and have the intermediary as your surrogate, your substitute, purchase that property as your straw man, if you will. An alternative to that would be to go to the seller and say, hey, seller, I love your property. Can I put the handcuffs on you? Can I lock you up with a contract or an option? And if the seller is patient and doesn't have an immediate need to get this closing done, that might be a simpler way to lock up a sure thing. But in my experience, most sellers are not very patient, and they want to get their deal closed quickly. They don't want to have an indefinite closing period.
Definitely. Thank you for that explanation. Makes sense.
Have you heard of an app called or a program called Pad Slip?
No.
Well, there's all these different ways to rent properties. There was Airbnb, VBRO. This Pad Slip is another way that people are renting out rooms in a house. So rather than renting out the entire house, they're renting out a portion of the house. And that is a way for landlords or owners to get a maximum return because they charge a higher amount of rent for a smaller portion of the property. They're renting out the room rather than the whole thing. And I think there's lots of investors that are looking for ways to maximize the yield, the cash on cash return that they're getting for their investments. And they're really being very clever and smart, and there's a lot of ingenuity going on with real estate owners wanting to find new ways to maximize the income and make their equity work as hard as possible for them so that they can enjoy a comfortable life in their retirement and build wealth for their retirement.
Sure. Yeah, that's pretty innovative that there's all these ways now.
There really are. I mean, the housing hack is a nice one that I think a lot of people are doing, and that's a good way to get your feet wet.
Mm-hmm.
But that's just the beginning, and there's a lot of other tools available in the tool belt. After 2027, there'll be another opportunity for the next iteration of the Qualified Opportunity Zone, QOZ, and that takes effect in 2027. And then there'll be even more avenues, I think, for tax deferral on the sale of real estate. Furthermore, these tax deductions that you're now allowed under the big, beautiful bill that became the big, beautiful law allows for more rapid depreciation. So people are also offsetting gains that they incurred from the sale of real estate with new tax deductions that they're accelerating on the purchase and construction of new facilities and improvements that they're picking up. So that's another way to kind of offset the gain, is to create rapid depreciation deductions, to accelerate your deductions when you buy new property. It's not a 1031 exchange, and it's not quite the same, but it's another tool in the tool belt that people didn't have before when there wasn't 100% depreciation.
Right. Thank you for sharing that. That's fascinating.
You bet.
So before we wrap up here, if somebody wants to reach out, connect, learn more, where can people find you and connect with you?
I love to talk to people on the phone. You can reach me on my phone, which is 612-643-1031, 612-643-1031, or our website, cpec1031.com. That's Charlie Papa Echo Charlie 1031.com. I like to collaborate with people, and I like to build a team around you to create the maximum possibility for your success. So we may want to involve your accountant, your lawyer, your real estate agent, your banker even, and building a team around you to basically make your plan come to life, whatever that plan might be.
Perfect. Well, appreciate your time, your story, and your perspective. Thank you for being here.
Thank you for having me.
Of course. And for those tuning into the show, if you got value, make sure that you have subscribed. We've got more conversations with operators who are building real businesses, and we will see you on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.